My goodness, there's a lot of information floating out there about reverse mortgages. I love reverse mortgages in the right situations, and I want to make sure that my clients fully understand how they work, what they are, and so they can decide if it's a good fit for them or not. My name's Miles Pitcher. I'm the owner of Superior Lending. I want to share with you today 10 reverse mortgage myths that are out there. We'll take them one by one and let's debunk these myths. Myth number one, the lender or government will take my home. That is completely false. So when you do a reverse mortgage, you totally retain and keep title to your home. Or maybe you have a trust that you'll put it in. That's totally fine, but you remain the owner of your home. The lender does not. Myth number two, it'll just give me another monthly payment to make. With a reverse mortgage, you do not have to make a principal and interest payment on the home. In fact, the only things that you are responsible for with the reverse mortgage are to make sure that you pay the property taxes every year, and you pay your homeowner's insurance, and you pay for the HOA if there is one. But as far as the mortgage payment goes, that's taken care of within the reverse mortgage. And as long as you continue to live in that home as a primary residence, it will always be paid. Myth number three, my heirs will be responsible for repaying the loan. So the reverse mortgage is a type of loan that's referred to as a non-recourse loan, meaning that the lender cannot come back against you or your heirs or estate if the loan does not get paid back. The repayment of the loan is totally dependent upon the property which it is tied to, which is the home. And that is the limit of the liability to you or your estate or heirs. Myth number four, I will have nothing to leave for my kids. So this is not necessarily true. What it means is that as home values increase, and which they typically do over time, the value of that home is going to continue to rise. And with a reverse mortgage, the interest accrues and builds in the loan balance, but any remaining equity in that home, once you sell it or if you pass and your heirs sell it, that equity goes to your estate, your heirs, or according to what you've outlined in your will. Myth number five, I won't be able to leave the home to my kids. So you will always have the option of having that home be available for your kids. At the time the home is sold, the reverse mortgage just has to be paid off, and that home can go to your kids. It's their choice if they wish to keep the home in the family. Myth number six, I can't qualify because my home isn't paid off. Many times we help clients who have mortgages on their home currently, and they're making that monthly mortgage payment, and maybe it's a burden, maybe it isn't. But it is very common for us to do a reverse mortgage to pay off and replace that current conventional mortgage that is on the home right there. So it is very, very common and not a big deal. Myth number seven, I won't be able to sell my home. So just like with any mortgage you have on your home, you are in full control. At any point you choose to sell that home, you are able to do it. And you can just call up the reverse mortgage company and say, what's my payoff? And as long as you sell the home and have enough proceeds to pay off that mortgage, you are set and totally in control of that. Myth number eight, I hear lots of people get default or get foreclosed on these loans. So as I mentioned before, there's only a few reasons why a reverse mortgage would ever get called due or go into default. And that is, you don't pay your property taxes, you don't pay the homeowner's insurance, HOA, you don't keep the home in a good livable condition, and then last of all, and this is probably the biggest one of all, is the home no longer is your primary residence. You need to keep it as your primary residence. You can't turn around and rent out your home and move somewhere else. This has to be your primary residence. So as long as you are meeting those qualifications, there's a very slim, and the loans just don't go into default and get foreclosed on. In fact, reverse mortgages have a very, very extremely small percentage that go into foreclosure. When we do the loans for clients, we do a financial assessment. We see if they're going to be capable and have enough cash flow to be able to take care of their property taxes, homeowners insurance, HOA. If they are not, we do a thing that's called a set aside, or we escrow those payments so that the client, the homeowner, does not have to worry about paying those. Myth number 9, I'm afraid that my spouse will be kicked out of the house if I pass away. So this is a myth from the past. The new rules and guidelines state that even if you have a non-borrowing spouse, they will be provided the same protection guidelines of the reverse mortgage, even if you were still living. So it's awesome for your spouse. The typical age for a reverse mortgage is 62 years old. And it used to be that both spouses had to be over 62, not anymore. So now one can be over 62 and another one can be 58. But that protection of the reverse mortgage will continue for the 58-year-old spouse, even if the older spouse passes away. Great change to the program that helps protect and benefit our clients. Last myth of all, number 10. I need more cash flow, but I'm not desperate. So the reverse mortgage can be a phenomenal tool. It is not just for clients that are in a cash crunch and are desperate and need some relief in their cash flow. We see many clients who utilize this as a way to access equity to go do other investments, purchase a rental property, put some money in the stock market, pay off other debts so that their cash flow improves. Your home is an asset. It's equity that is yours that you can use and utilize to your benefit. So think about it more of a tool and a way of using it to better your situation. I hope these are helpful. My name's Miles Pitcher. I'm the owner of Superior Lending. We'll come back to you next week with some more mortgage tips. Thanks.